All right, buddy. Welcome to Digital Asset News, or Dan for short. My name is Rob, and today I just need to discuss about the things that are going on, of course, in the markets. Unfortunately, rug pulls, scams, and frauds. And what I want to do is I want to pull somebody in who could actually help me with this situation, and that would be Dan. Dan, the other Dan from Crypto Capital Ventures. And I pulled him in to answer some questions. So he's going to come right in and we'll talk about it. We'll talk about a bunch of stuff. We're going to talk about the projects built on Cardano as they were did a little rug pull. We're going to talk about 8 members of Congress tried to stifle the SEC investigation and kind of get Dan's opinion about regulation, where we're going. And then I think the more important question is the bottom in? And what should we be looking at? And what are the lessons learned from all of our mistakes and the catastrophes around? So without further ado, let me welcome Dan back to the program. Dan, thanks for coming by.
What is up, my friend? Thanks for having me. I love it. We're keeping warm here in this bear market this winter.
Sure. Yeah, I mean, there's nothing else to do but just kind of just look and watch the world burn, right? I think that's what keeps me warm.
Is that what's keeping us warm? The world burning down? Oh my goodness.
Dude, it's not the greatest, but here's what it is. So let's jump in. First of all, if you don't subscribe to Dan at CCV, there's a link in the description. Very simple to find. He goes over a lot of different information. He's got his eyes on a lot of different things and does a lot better analysis for different projects. Cardano being one of them, but also the macro and also the TA of what's happening. So first things first. Projects built on Cardano pulled a classic rug pull. And me and Dan were talking about this before we went live. And this is what we got. And I want to stress that, I can't stress this enough, which is this, is that there's a difference between the layer 1 solution being a scam and a rug pull, and the projects that are built on top of that layer 1 solution being a scam or a rug pull. But here's what we know. And then I'm going to have Dan fill in the blank spot. So Ardano Orbis calls it quits. Here's what we got. So Ardano Orbis, which both announced ending development on the same day, today, or maybe it was yesterday, actually. Let's see. When was this date of this one? November 24th. Okay. So it's been has it been a couple days, Dan?
It's been, I guess, a day. I think it was yesterday. It all went down.
Yeah, look at that.
Right on Thanksgiving.
Yeah, Thanksgiving, which is if you're going to do a rug pull, good time to do it when everybody's, preoccupied with a pretty major holiday. Not too bad. They could have waited for Christmas, but whatever. So Ardano pitched itself as the first all-in-one stablecoin ecosystem built on Cardano. In 2021, the product raised $10 million in a funding round led by 3 Arrows Capital. I don't know if anybody has heard of them. C Fund, A Sense of Assets, and this was and CEO and co-founder Ryan Matavu, nailed it, said, along with the investors' expertise, this funding will allow us to establish Ardano as one of the premier DeFi gateways on the Cardano blockchain. The future is bright. And then today, they said this. Unfortunately, due to recent developments with regards to funding and product timeline, Ardano project has had to come to a halt. Our code will remain open source for builders to continue our work going forward. And then just real quick, Orbis followed suit. And it almost looks like the same tweet. And what Orbis is it's a layer 2 solution using ZK Snark rollup tech for scaling. And the big concern was there was no working project, and they were trying to get funding by, looks like Cardano. And just so you know, the Orbis project CEO is Ryan Matavu, who also founded Ardano. So, Dan, what do you know? What do we got? And what should we be aware of with this one?
Well, I know just as much as anybody else out there, which is not much. I mean, we don't. So, and I was just watching Charles. He was discussing this, and one of the things he mentioned was they're doing a forensics, report and trying to get to the bottom of what's going on here. And it's, I think, like the biggest thing, especially because I run a recruiting firm, so we recruit for early stage startups, and especially as the recruiter, like I see how tight startups are with their money, especially as they're trying to grow and build a product, grow a team. The first thing that popped in my head was just like, because they raised $10 million in their seed round, right? So
yeah,
like what was their burn rate to have gone through all of that? And that doesn't make sense to me. So I don't think it's a money issue, which Charles, I think, also mentioned. so what's going on? You know what I'm saying? And that's the thing that I think we need to give it a little bit more time. But interesting that you noted both projects have the same CEO.
Yeah, that's a little bit shaky. And then here's the thing. So let me do some quick math. November 2021, December, or now it's November 2022. I think that's roughly a year. So with
Like 800 some thousand a month, 9 employees.
That's it's a, like you said, it's a hellaciously large burn rate for a project. Unless they were, it doesn't make much sense. It just
doesn't.
does.
It's not. It can't be a money. It's not a money thing. Like they had, from what I saw on their LinkedIn for Ardana, or Ardana, however you want to call it, I think it's 9 employees. So they had enough funding, right? So I don't know
how that worked. I don't know. I also know this, like, I sent you the link for Charles when he talked about this on his channel. The first one was taken down because I guess there was an audio issue. The second one, I didn't know this, but it looks like even Charles had personally donated or funded some of the project. He's lost. He's lost some money.
I think 500,000 or something is what he tweeted. If I remember seeing that. Chump change.
Well, for some people. For us, that's a pretty bad decade.
Yeah. So it's kind of like, the contagion that we've all been seeing in crypto and all across the space. And especially even in recent Cardano videos, I've just been like, man, Cardano's been like holding up pretty good from the contagion, kind of proving itself as an ecosystem. And it seems like it's made its way into Cardano ecosystem. But it's the startup world. Like every project, every layer one is going to have these, bull market or bear market. So it's something to be very cautious of.
Right. So Dan, I mean, that's what your profession is, right? You're like early investor, venture capitalist, or do those things. How often do you get the winner of the big winners? Like, let's say you invest into 10 projects. How many make it?
Yeah, well, I'm not so much the investor. Okay. I'm the recruiting firm that helps build the team.
Okay.
Yeah. But with that said, I get a nice perspective of things. And I've, from the startups we worked with, and we kind of go after well-funded startups that are doing well. And, we want to see that they're going to grow a nice size team because that's where our fees are. But what I will say in regards to this happening is, most recently we've been recruiting for startups, one building on Ethereum in the gaming metaverse space, one building on Solana, NFT exchange. And I'll just say, like, this bear market, even for like well-funded, the Solana project is backed by Sony. This bear market's hurting, like projects, even startups that have like solid teams, solid funding. So when we start seeing like these really early stage ones, like Ardana on Cardano failing in a bear market, it does make sense to a certain extent. The bear market is putting so much pressure when it comes to building. And it's also a lot of it for founders, I think, a mental pressure. We want to think about money. Did they run out of money and resources? There's a mental aspect to this that I think doesn't get talked about enough, but I just knowing founders myself and seeing what they deal with when especially prices going down in the crypto space, I think that's playing a big role as well.
This would have been a whole nother video, but I'll just ask you, like, when you're taking a look at the founders themselves, can you take a look and just see like, okay, this one I think is going to make it because of this aspect of it? Like any kind of like mental hardiness or the ability to have the willpower to power through, or you just kind of see that later? Like when you look at things where you're like, I think this won't make it because of this.
For me, it's so simple. It's like going to their LinkedIn and seeing their history, their background, especially in the startup space. I have one startup that did an exit like a year and a half, almost 2 years ago. And the guy, we started recruiting for them in 2018, but the guy just has such a successful track record in the startup space. And so when I start seeing successful entrepreneurs that are launching startups in the crypto space, that's something that attracts me. That's something that kind of gives me confidence. But you'll notice with a lot of these projects that are getting funding from things like C Fund on Cardano and in other ecosystems, you'll notice that they're very young. There's not like a history of successful exits. And so when things like this happen, it's kind of like, well, it makes sense to a degree.
Yeah. I mean, there's only so many Bill Gates out there. There's so many Bezos, that actually came up, because if you take a look at all the ones, I mean, it's just tough to find the right one. So yeah, I always take a look at, I don't know where things are going till you know where you've been, but not even then, even past success is not going to guarantee the
exactly.
future.
But look at SBF, perfect example. Where'd he come from? You know what I'm saying? Like his track record there. I mean, there was no huge successful track record, and look what happened. I mean, so kind of a little hint. Where'd he come from all of a sudden to be leading this multi-billion-dollar?
I know. Well, we know. I mean, there's some rumors going around, but
yes, there are some rumors.
There's some rumors, but I mean, I will say, and when we get to like our mistakes of the year, we talk about, like, one of mine is even talking about Celsius. Like, I will tell you, like Mashinsky, he had a couple of successful exits and he did pretty well.
Sure, that's a good point.
However, again, it's everything is cool, everything works until it doesn't. Everything is smooth until there's some problem, and everything that happens pretty well until there is just a problem with either greed or corruption or just an oversight. But it's tough, and in this situation, in these places, you're going to lose more than you win, I think.
Yeah, I agree.
All right, so that will be that part. Let me know what you guys think in the comment section. Also, if you have a comment, put in the live chat. But if you have a question for me and Dan, we're going to do a Q&A. Put that in the comments section, which is underneath the live chat, because then I can just take a look at those and not go through 1,000 different statements, which I do like you guys, and everybody's funny. However, I just want to get the questions sometimes. All right, so the next one. 8 members of Congress are trying to stifle the SEC investigation. And this is one of those things where, if you take a look at it, it's one of those things where you have to I talked about this before, is the story behind the story. And what this is from Unusual Whales. And he says, it was just a tweet. And when you read this, you're like, this is awful. Congress members reportedly tried to stop the SEC's inquiry into FTX per the prospect with a March letter that questioned the SEC's authority to inquire about crypto and in part FTX. And he talks about here how 5 of the 8 received campaign donations from FTX employees from, 3,000 to almost 12,000, which, if you look at that, you're like, first you're like, well, looks kind of shady. And then you're like, 3,000, really? That's what it costs to buy a congressman? So just wait. So here's what it comes down to. This is where the actual source came from. Congressman tried to stop the SEC inquiry. Just so you know, the SEC was seeking information from FTX earlier in the year. So I know people will always say that, protect me harder, Gary. But they were there 3 or 4 months, and they didn't pull the trigger, so it didn't really help anybody. Anyhow, what they're talking about here is there was a letter in March from 8 House members. And before anybody says, well, those damn Democrats or those damn Republicans, it was 4 Democrats and 4 Republicans. So right down the line. They questioned the SEC authority to make informal inquiries to crypto and blockchain companies, and intimated that their request violated federal law. And this is from Tom Emmer, and he is a huge crypto proponent. He just pretty much says the same thing. I don't know why Gary's doing this. It feels like it's enforcement through regulation, or regulation through enforcement. That's not how it goes. So to break this down, 5 of the 8 members received campaign donations, 3,000, 12,000. Ted Budd, Republican, received $500,000 in support from a super PAC created by FTX co-CEO Ryan Salame. So that would probably be one of those things you're like, oh, that does make a little more sense. $500,000. However, just wait. Emmer was head of the National Republican Congressional Committee, the campaign arm for House Republicans, and the NRCC's associated super PAC received $2.75 million from FTX in 2022 and $2 million from Salame in late September and $750,000 from the company's Political Action Committee. So it's amazing how you can get around the legalities of donating to congressional campaigns just by doing a super PAC. The SEC declined to comment. 6 of the 8 congressmen have yet to respond. Rep. Byron Donald said through a spokesman that the congressman was not attempting to influence the ongoing investigations and did not exchange any communications with FTX was merely concerned with the SEC procedure and guidance with the crypto firms, which some have described as regulation by informants, by enforcement. And then it talked about how, of course, Reuters report that FTX was already under investigation. And
Coinbase too, it says. So yeah. Coinbase receiving inquiries from SEC. Was Coinbase doing any donations or contributions? Anybody?
I think it was the yield program, because what it comes out of this was SEC asked FTX about a rewards program that gave depositors interest on their crypto assets, which would make them a security. So a couple things to break down and one of those is this: people will say, well, the SEC is they're trying to protect us and they're doing a little bit too much. But in all honesty, this wasn't about really protection. First, it was just about Gary saying, this is a security. You need to register with us.
Yeah.
And it wasn't about fraud. That probably would have come out later if they would have really kind of dug deep into it. And the second thing is that if we take a look at the yield part of it and what it was, if they just would have done just that part, I think they would have actually put 2 and 2 together and actually done some real regulation.
Yeah.
But Dan, what am I missing here? Do you think this is a good play? And do you think where there's smoke, there's fire? Because of course these guys were, what it kind of makes it sound like is that these guys were bought and they were looking at FTX, even though Emmer went right on Fox News yesterday or 2 days ago and said, hey, these guys have to be prosecuted to the extent of the law.
It's a tough question. Well, actually, I'm on your show, so it's not a tough question. So you can look at my most recent videos, even the last few weeks with FTX and all this stuff that's happening. These headlines I want to cover and I want to talk about because there's such conflict between just the general public too. Like what's going on here? Some are like on the conspiracy side, others aren't.
Right.
But I try not to, I just like to, in these situations personally, I like to sit back and just watch it play out and try to not, as a content creator, interject my own opinion. You know what I'm saying? But what I will say is, whether there's this crazy conspiracy going on or not, everything that's happening right now that we're seeing is probably one of the best things that could be happening for crypto right now in the bear market.
All right.
So, and I wanted to ask you, do you think, and you can go back to the headline, the actual headline, do you think there's a conspiracy in there?
So like those types of things, it's very easy to put the tinfoil hat on and say, this is what it is. It has to be what it is. But if you take a look at it, how many months ago, let's just rewind to November 2021, or even March of 2022. How many people were calling Sam Bankman-Fried the next Jeff Bezos? How many people were lauding him for all of his accomplishments? And how many people were like Tom Emmer? We're crushing Gary Gensler for not doing his job, even though they were trying to. So,
and it was a good thing. It was a good thing then.
Yeah, don't say that, Dan. But you're right. You are exactly right. It actually was a good thing that Gary actually did come in there and go, hey, you're doing this. I don't think they thought it was fraud when they asked the question about you guys are offering yield. But if they would have kept pushing and pulled on that thread, they would have figured, okay, let me see your financials. Where is this coming from? It's from all the other people that you're taking it from, and you're putting it over here. And then are you commingling your funds? Are you investing into other projects? And why does it go from FTX to Alameda Research to something else? And
why is there all this property in Bahamas? Like, what's going on here?
Exactly. So like we here in the crypto space, I know it's gonna be very unpopular, but it's just the truth. We here in the crypto space, we're like, damn that Gensler or whatever else. If on some of these things, if he just would have done his job, it would have protected a lot of people. And I know people are like shouting at me right now, but I guarantee you, if you lost your entire life savings in FTX, I almost can guarantee that you were probably thinking, yeah, that would have been nice if Gary would have stepped in and actually done some things. Now,
set some guidelines here. Like give us some clarity. Like this whole space is like begging for any type of clarity, And I saw BitBoy, he did a clip the other day, and he said he blamed it all on Gary Gensler for not offering any type of guidelines. Like that's his job, right?
Yeah.
And it's like, why does it take so long? Why why are you going after Kim Kardashian when like the rest of the industry is just like begging for answers here on, because they want to build properly and legally and correctly, you know?
Yeah. And then like, there's so many nuances for that.
Yeah.
But I mean, I would just say that here's what's going to happen. And Dan, I'm glad you said the word clarity, because people, when I say regulation, people hate on me, and that's okay. But clarity be nice.
Yeah. Say clarity.
I should just say clarity from now
Yeah.
on. I don't know why I'm so slow, but just tell me what a commodity is, what a security is, and what a currency is, and then we can go from there. And then, like we were talking of proof of reserves and proof of liabilities. What do you think about that as far as moving forward? Because I don't think the government's going to get it right for us. I do think that we can self clarify.
Yeah.
Some things.
It's all about transparency and accountability. That's how the space is going to thrive, right? And what's so perfect about it is like, it's not any ordinary space. It's the blockchain space. Blockchain offers tools on chain to help make these things happen in a decentralized way, right? Like, we want accountability and transparency. That's literally what the space is about. So we can get that. And you just saw, I mean, Binance, they actually, I think hours ago, I just saw the headline, they released their proof of reserves Merkle tree solution. It's like live now, I think.
Yeah.
And that's like the starting point, things like that. And it really is up to the big players too. Binance, obviously, behemoth in the space.
Right.
You know, Chainlink, they have a proof of reserve auditing service that they're releasing. Okay. Stuff like that. That's the solutions we needed. And it lends itself to the accountability, the transparency that the space needs. And if the regulation side of it will allow us to just do that, all the cards are on the table type of deal. You mentioned before we went live, policing ourselves, kind of.
Right.
I think it's such a good way to kind of move forward, you know?
Yeah. And like, if we can do it the right way, then people like us can say, okay, well, you know, I'm going to use this exchange because they're like the gold standard. They have proof of reserves, proof of liability. Everything is out there that's open. And we actually see it. And I know that I can trust them a little more. I think that will be the better option than the government coming in and going, okay, let me see everything and we'll put it out there. And then, you know, we'll do everything for you. I don't think that's the right way, because of course I think they will overregulate too much.
Exactly. Yeah, and then we'll lose transparency and accountability because of that. You know what I'm saying? But it's interesting to see our world changing, even as content creators. You know, you and I'm sure you do this all the time. You go into CoinMarketCap and we look at what's the market cap, what are the top cryptos. There it is.
Yeah, there it is.
So CoinMarketCap offering a proof of reserve tracker now. Like, this is the world changing for us. It's going to allow us to track, you know, the proof of reserves via the exchanges that are choosing to do that. And you know, we have a new data point to watch, right? And so it's pretty cool actually to see that in this bear market as we do mature as a space.
I think, well, that'll lead me to my next question then, which is, I mean, we don't like to see bear markets, but they are a necessity. And the question then becomes, well, is the bottom in? I know no one really knows, and everybody who said that the bottom is in June, you know, obviously it didn't work out. So Dan, I know you take a look at the charts a lot. What do you see? You think the bottom is in? Also, what are the lessons we've learned along the way, the mistakes?
Yeah. So I can share the Bitcoin chart and just kind of point out some general things that I've been watching.
Sure.
And, you know, for context, I charted, actually, this is the chart that I charted. I charted this back here in 2018 in the bear market low. I started noticing some things as it pertains to, you know, these white lines. These are halvings and the cycles of Bitcoin. But mainly I started noticing these things in regards to this Fibonacci. And Fibonacci is just kind of a resistance support, macro resistance support type of indicator that I use. So I took January 2015 bear market low to the bull market high of 2018. And it's this 786 line that really stuck out. It's right here at the bottom of this green rectangle. It's a 786 line. It's a more drastic retracement, right, from the high. It's like 78% or so down. What I notice in Bitcoin and its cycles is it tends to bottom out below that area, right? And same thing happened back here in 2015 when it finally bottomed out. The reason why the area is so important to me when I was kind of studying it was it's just all the other data and on-chain metrics when this was happening that kind of came together. It made me really speculate on what was about to happen next. And so I covered this in 2018. I speculated from the swing low that we were really in to a speculative $90,000 Bitcoin. It gave me this chart that I charted, and it wasn't perfect how we played out. We obviously only went to 70,000, not 90, but just look how we hit a high and then we're coming back down. And most recently we've fallen below the 786 line right here. So if we go to kind of a more, this is a real-time chart, this is the bottom range for me. And, you know, there's so much other data, you know, that revolves around this, but that's kind of been foundational to my own analysis. It's the starting point for me from a macro investor standpoint. And so the question is the bottom in? I do say my opinion is kind of like, I think there's one more low. If Bitcoin was to consistently do what it's done prior, 35% below the 786, this yellow line is 100% in play, and it wouldn't be out of the ordinary. So that's like $11,000-$12,000 Bitcoin. So I'm allowing for myself mentally a drop like that, right? But what I will say to answer this question is the bottom in. I think the bottom range is in, right? And so yeah, we can dip another 30%, but I think time is running out in terms of accumulation opportunity, and that could be months away. But months in this space is like the snap of a finger. You know what I mean? And that's so, you know, we're going to come out of the woods, just even the macroeconomic landscape that we're in outside of crypto, the things are going to turn around. And it's like, what happens then for crypto when that happens? You know what I'm saying? It's going to be too late for a lot of people that kind of just twiddled their thumbs in the bear market waiting for like a, you know, $5,000 Bitcoin.
Which, you know, I mean, hey, look, it could happen, right? I mean, 5,000 Bitcoin could happen, 2,000, 1,000. I mean, I'm just saying everything's out there. It's not very probable, but I mean, it could actually happen. I can see 12K. I can see 13K. I don't really, and I think for a lot of us, especially, I mean, everybody who are the usual suspects that show up to my show, you know, the Teslas and the golfers and everybody else who comes in, softball Amy, not me. So they all know they're not tourists. They're actually waiting for this opportunity, and they're doing the same thing that I'm doing. I'm going, because when you said that 13K, I'm like, oh, please let that happen. That'd be fantastic. Because I mean, for us, it's not a big thing because we kind of know where things are going, whether that be the 4-year cycles play out or it's elongated. Maybe we're in 2020 instead of 2025, we hit all-time high. Maybe it's in 2026 or 2027. Maybe it's in 2023. I don't know. But that's why, you know, you take a look at these charts, you take a look at like the MVRVZ score, you take a look at the Puerto multiple, you take a look at the basic things just to go, okay, the market's overheated. Let me take some profits. And that's pretty much it. So
yeah, it really is.
Yeah. So Dan, that'll conclude that part. Now let's get to this is what we really were waiting for, the mistakes. So I have had multiple mistakes. I will say them again. So people can, of course, they always remind me what they are. Which was, of course, I talked a little bit too much about Celsius. Obviously, that was not the right, but it was a weird thing. Like we talked about, Mashinsky had some pretty successful exits, billion-dollar exits, I believe. And during the March 2020 coronavirus scare, when everything just collapsed, they only had to liquidate 3 people for their loans. Everything was working up to that point, and then something happened. They lost their path, a little bit too much loan, too much greed, whatever else. Came out, right? Did a video on June 12th, I believe it was, link in the description, where I talked about, hey, there's something going on with Celsius. Probably want to take your funds out. 10 hours later, they shut down withdrawals. Voyager, same thing. I figured that out a little bit too late. On June 22nd, we figured out, because they're a public company, that, hey, they had given a $640 million loan to 3 O's Capital. I said, I'm going to stop my crypto from being on there, take it off. 2 weeks later, it came down. And of course, that's when the rules came about, which everybody knows about. I think people are sick of me saying, but the middle one there is don't leave anything on exchanges. It's just a recipe for disaster. So there's there are those things that I messed up on. And I think it's a good thing because now, Gary Gensler going with my Wi-Fi, Celsius and Voyager and FTX. So Dan, what kind of mistakes this year have you made, and what have you learned? The big thing is, what have you learned from them?
I'd say what have I learned is a big one, because I would say also I almost made some mistakes. I'm very close, and one would be BlockFi. I remember it wasn't long ago.
BlockFi, yeah.
I was talking, and this is a mistake I almost made, which is just like talking to my friends and just like, dude, the returns just sitting in a stable coin are ridiculous. Why am I sitting my fiat in the bank? Like, and I wanted just to move like my savings to like just get those returns. And I really thought about it. Like I was like, what are the chances, you know? And I didn't do it, thankfully, because it was just like, you know, my gut told me not to. That's a mistake I almost made. And so another mistake I almost made was I'm pretty picky with sponsors like that we bring on the channel. We don't do a lot of sponsors. And so we were in talks with FTX kind of multiple times and never moved forward with that. So I'm happy about that. And that's just because we kind of set a high bar in terms of doing sponsors. But for me, the lesson was, you know, I wanted to have like a solid, awesome exchange on board with the channel. And I didn't really think, especially for something as big as FTX, when we were in talks with them, I didn't even really think about the possibility of any type of collapse like that happened. And so I think being overconfident in this space, especially in the big players in the space that, you know, as we're so early stage, it's like a lot of us just rely on those big players to kind of lead the way in innovation and growth. I think we have to stop doing that, you know, and that's kind of where the transparency and the things that we were just talking about come into play, because it's not blind trust. That we can't have blind trust anymore. And that's the biggest lesson I kind of am coming out of all of this with, is having blind trust. One mistake I did make is, Ardano, I don't think I did a full video on them, but I think I mentioned them in a video, just like they seem so undervalued. There's so much potential. And obviously look what happened there. And so as a content creator, it's something I've learned also, is just like, and I've stopped kind of just low cap stuff, especially in the Cardano ecosystem. I don't want to cover it. It's just, they're too small in market cap. And I'll stick with the blue chips, but I think there's a lot of opportunity out there. But it's like, wow, it's risky, and we need to always remind ourselves of that.
Yeah, I think it's super risky. And one of the things that I think that I learned along the way, which is, I thought investing could be like a set it and forget it, especially in these exchanges type of thing.
Yeah.
But now that we've gone through this, like you can set it and forget it for like an S&P 500. You can set it and forget it for mutual funds. You can set it and forget it for like T-bills if you really wanted to. But for this space, sub $1 trillion market cap, hovering around 800 billion, I think you have to be informed on a daily basis about what's going on, so you don't get either rug pulled, miss out some type of exchange or some type of issue that comes up that you're like, oh, I didn't know about that. Now everything's gone. Like that's one of the things that I was like, wow. It is an amazingly harder thing. I got to tell you, I can understand why, like, you'll have like a Bitcoin maxi going, I told you, because how many times did those guys go through this whole thing and they just stuck their stuff in like a paper wallet and they're fine right now. But how many of them are actually here and haven't sold? I don't know if that's even possible.
Yeah, that's a good question. I think the other thing to take into consideration too is, like, even in, you know, just traditional markets, they're not immune to it either, right? We had Lehman Brothers in like 2008, right? Was it over 600 billion lost just like that, right? And then when they went bankrupt. And so, but it's like the same lack of responsibility and accountability is what led to that. So it's like, That's exactly what's happening here in crypto, and it just needs to get under control. The thing is, we can't even sit here and say it's under control in the traditional world though either. So I don't know, man. We're in trouble.
We're gonna be, so everybody just expect a lot of pain, a lot of volatility. I think a little bit of pain coming up in 2023, but we will see. So that, ladies and gentlemen, will conclude the news right there. So what we'll do, get your questions ready. You can put them in the live chat. It's fine. We're good to go. But that will conclude for the news. If you got to get out of here, get out of here. It's probably a nice day. It's a beautiful day in Puerto Rico. I don't know where you're at, but that is it. So if you got to take off, take off. Like and subscribe, all that good stuff. Now